Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 26th of January, 2025. We're providing our regular weekly update for the week ending the 24th of January. Last week saw gold and silver rise yet again, partly because of the devaluation of the dollar. The question is, will this devaluation continue? And can we see gold hit new all-time highs yet again? Well, to find out, let's take a look. Looking at the figures, we can see that gold rose $68 last week, rising from $2,704 to $2,772, having hit a high of $2,786 and a low of $2,690. A rise of 2.5%. Gold spread between high and low was $96, much larger than usual. Last week we predicted gold would trade between 2650 and 2775, though it did breach this upper limit for a very short period of time by $13 on Friday. It closed within our range. In sterling terms, gold actually fell £7, closing at £2,223. And in euros, gold closed €8 up, closing at €2,648. Silver rose 22 cents, rising from $30.49 to $30.71, having hit a high of $31.20 and a low of $30.05, a rise of 0.7%. The difference between its high and low was $1.15, which is not particularly much for silver. Last week we predicted silver would trade between $29 and $32, which it did comfortably. In sterling terms, silver fell 40 pence and closed at £24.57. And in euros it closed at 29.28 euros. That's down 0.50 euros. The gold to silver ratio rose and went above the 90 level. It actually closed at 90.3 to 1. Bitcoin is currently standing at $104,500, and that's up another $1,500 on the week. US equities were higher, though there was a small amount of selling on Friday. The Dow Jones up 105 points at 44,424. The S&P up 105 points at 6,101, and the Nasdaq Composite up 324 points at 19,954. The FTSE Index was down, albeit just 3 points, at 8,502. Oils were lower, thank goodness. Brent crude down $2.29 at $78.50, and WTI crude down $3.22 at $74.66. The dollar index is down just shy of 2 points at 107.44. Now, last week we stated there was little economic data coming out of the United States, save initial jobless claims, which were up 5,000 on the week, and the consumer sentiment figures for January, which were down 3 points. However, this coming week is more relevant and potentially more impactful. We have the consumer confidence figures for January on Tuesday, but all eyes will be on Wednesday, when the FOMC makes its decision on interest rates. Our opinion is there will be no change. More on that in a moment. GDP for quarter one will be announced on Thursday. Expectations are a 2.5% rate, down from a previous rate of 3.1. On Friday, new inflation data in the form of PCE and core PCE. The year-over-year PCE index has been standing at 2.4%, and it's expected to rise to 2.6%. And the core rate stood at 2.8%, and expectations are no change. It will hold at that level. Now, analysts have been predicting for weeks that the CPI figures, which were released a fortnight ago, could push gold above the 2,726 level to as high as 2,790. And this past week we saw it reach 2,786, just $4 shy of the top of this figure. Analysts are hoping that easing inflation data has strengthened expectations of a dovish Federal Reserve stance, which typically supports gold. The Consumer Price Index, when it was announced, posted a modest 0.2% monthly increase, while core inflation came in below forecasts. Analysts are hoping something similar will happen with the PCE data. Future markets are pricing in nearly even odds of 2 rate cuts before the end of 2025. These expectations weaken the dollar and reduce the opportunity cost of holding gold, potentially boosting its attractiveness to global investors. But it also makes other forms of investment also attractive, particularly equities. We can see that the 2-point fall in the US dollar index boosted gold by $68 this week, whereas it fell £7 in sterling terms and only rose by €8. In fact, this was the worst weekly dollar performance in over a year. That said, it was not that long ago when the dollar index was heading below 100. It didn't quite dip below that level, but it was going there. There is no doubt that if inflation comes in as expected or lower, we shall see the value of gold and silver rise further in US dollar terms, not necessarily in other currency terms. Of course, the opposite may be true if inflation is worse than expected. We say may be true because much also depends upon the economic anticipation of Trump's tariffs and general trade policy. As far as silver is concerned, analysts are focusing on the $31 level. They predict that if silver can rise above this and hold, then the target in the next couple of weeks will see rises to $32.33. However, we must not forget there is still the potential downside to $29.86. This is technical analysis, though, and we all have to accept, whilst TA gives precise figures, reality is often very different. The concern for silver is, of course, industrial demand, and anything that may be adverse to it can have a detrimental effect when compared with gold. The confusion coming out of China is leaving analysts pondering whether industrial demand is going to rise or to fall, and their policy announcements will have a significant effect on silver's price. So where do we forecast gold and silver this coming week? Well, this week we expect gold to trade between $2,725 and $2,825. Could breach that figure if the PCE data is favorable, with 2690 and 2850 as outliers. Silver, we're keeping our predictions more or less as before, although raising them slightly, $30 to $32, with $29 to $32.75 as outliers. Slightly wider margins than usual because of the potential of quite considerable movement this coming week. But what do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to our sister channel, Finances Do Matter, subscribe there, and let's look forward to perhaps now a more exciting week ahead and a continued rise in gold and silver.